The S&P 500 and NASDAQ closed at weekly all-time highs. Again, yes, I know these intros are starting to feel a bit like Groundhog's Day, but trust me, this version is a lot better than a perpetual bear market. Despite the strong weekly close we saw in indices, crypto and other risk assets struggled, with the NASDAQ lagging since Tuesday's announcement of reduced spending on the US's Stargate AI infrastructure project. Now, the continued trade struggles, exploding national debt, fun fact, it's now $750,000 per taxpayer, and rising consumer loan delinquencies probably didn't help either. But as we all know, the market isn't the economy. Yet despite the market doing well with corporate, retail, and hedge funds heavily invested, institutional players have been selling into the rally at a record clip. So do we need to be concerned, or are dips still for buying? Well, join me as we look at the key charts for stocks, commodities, and crypto to determine just that. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all had a good week despite crypto dragging just a bit. Before we dive in, if you do find value in the content, please like, comment, or subscribe below. It really does help the content get out there to more people, and it means a lot to me personally. So we're going to start right away with crypto, which can often be a leading indicator for markets. We're going to spend a bit more time in the charts on those names today than normal because there are a lot of mixed signals in crypto right now. The price action and support level breakdowns that we saw the last few days were really pointing to more downside ahead, but the daily close we just had today and the rally we had this afternoon may have reversed some of that, but we still need to be careful. Remember that as we get closer to the end of a bull run, corrections will become shorter and sharper. Corrections that may have taken 2 weeks to rebound from previously will now recover in a day or two. And price action like that is a leading indicator, a sign to you to start watching out for a peak incoming. We're not there yet, but it's something to be aware of as you're watching the charts. Moving on to equities, both Tesla and Google reported earnings this week and beat on EPS, but Tesla saw a little sell-off from a downbeat tone on their earnings call, a lack of forward guidance, and slightly disappointing financials. Regardless, the wedge pattern that we've been in for weeks did play support on the underside. We've seen a little bounce, and I'd argue that the future still looks bright for Tesla, despite it often testing an investor's patience and resolve. But we really move into the heart of earnings season next week, with big players like Microsoft, Meta, Apple, and Amazon all reporting. So let's get into the charts to see what they are pointing to for the week ahead. Okay, starting on the S&P 500 and little preview for the end, I've got a few new names to look at that I'm excited about for some positioning, and I'm also going to do a recap of the Bitcoin treasury plays because some of those really got hammered this week, and I think we need to focus on the stronger names and be aware of the ones that might be breaking down. But we closed the S&P 500 for the week at 6,300 and let's just say 90, and that is a new all-time high weekly and daily close. A lot of folks were looking at 6,350 as a resistance level, but the market had other plans and blasted right through that. If we bring up our RSI and mean reversion, you can see that the RSI is fairly elevated at these two peaks we've had. And if we compress our timeline, the last time that we had RSI levels quite this high was around July of last year. We spiked just a bit higher, and then we had that yen carry trade low. So I'm not saying that we're going to have another correction like that. That was a fun sleepless night that night. But we are getting very overheated on the RSI, and it's important to remember that just like the RSI staying oversold doesn't happen for very long amounts of time. It usually rebounds really quickly. When it's overbought, that also usually doesn't sustain for very long. So I would just be ready, especially as we're getting into a slower period in terms of seasonality, for weekly consolidation at least, and perhaps a bit of a correction between now and September. It's just something to be on the lookout for. I've covered it before, but these are the times in the market where everybody's euphoric that funds and bigger players like to throw us a sucker punch, as I called it in the last video, to catch us off guard and shake some folks out of positions. If we look at the NASDAQ comparatively, it's actually not as overheated on the RSI as the S&P 500, and it underperformed this week, where this whole rally up, the NASDAQ has generally been outperforming. We are in this rising channel here, which statistically generally break to the downside, but we can stay in a channel like this for quite some time. So we just need to keep our eye on the S&P 500, as a lot of the names we cover here are more tied to this indice, and we saw that underperformance most likely in our portfolios this week, despite the S&P 500 doing well. my personal portfolio returns were down for the week. Moving on to gold, and we just covered this one because when gold rallies, it's more of a risk-off mood in markets, and when gold drops, it's more of a risk-on mood. So you can just use this as an indicator, a sentiment check to tell you what the general feel is out there on the day. And you can see that on Monday and Tuesday, as we had those announcements of the reduced spending on Stargate, that the risk off sentiment translated into gold moving up, and then Wednesday, Thursday, Friday, we came back down as the S&P 500 recovered. We are really struggling overhead. We've had wicks above it, but we're really struggling at that 34.40 per ounce. We haven't closed a daily candle above that. And then we are finding support on the underside at this trend line, which is telling you just that buyers are stepping in at higher and higher prices. Generally, a pattern like this does break to the upside eventually. So let's keep our eyes on this to see what gold does. But if this does break to the upside, that means we would see muted returns or a bit of a pullback in a lot of the assets that we're invested in here. Moving on to one that I haven't covered before, but this is REMX, the Rare Earth Minerals ETF, and I've had this on my watch list for a long time, and the alert I had set to this trend line, I must have said it incorrectly because it didn't fire, but it broke this downtrend that actually we've been in since 2022. This is on the weekly chart here, which is honestly surprising considering the current demand for a lot of these rare earth minerals with data centers, batteries, whatever else that we're investing in so heavily. But it had this breakout to the upside. I wish I would have caught it. And as we always talk about with trend lines, especially when you've had a downtrending trend line like this that's been running for well over a year, since December of 23 that we've been testing it. We broke out, we had a little back test, and we've had 3 weeks straight up. We're just getting into a bit of resistance here on the Confluence Cloud, but this is one to watch that might be worth a play, particularly with options if you want to see faster gains on something like this from the breakout. We've gone from $40 to about $54, so that would be a 36% gain, so still not bad. It has a lot more to potentially run to the upside. Whenever I see this though with the Confluence Model Cloud, I'm hoping it's not too late to get into it because the cloud is coming in at this steep clip and it usually needs a beat to level out before heading back up. So let's just keep our eyes on this and see if we can get another good entry. Feel free to do what you want if you want to chase it now, but I would be looking for if we get a little rejection here and then bounce back up and get into this range. I don't know what the price action is going to do, but I'm just going to be looking for that higher low for a potential entry on this. So one to add to your watch list that could have good upside over the next couple of years, I would imagine. If we move over to SMH after breaking out, and this was on Tuesday, we broke down from our trend line. That was on those news of the Stargate deal being reduced, and obviously that impacts semiconductor demand. We did break down, but we found support roughly at our breakout zone, and we're just consolidating now, which consolidation is absolutely healthy. So for the broader semiconductor space to be doing this, this is actually great to see because runs up like this are not sustainable. Even if we get a little bit of a correction, and then continue moving back up, that's also a great sign for the space. But I want to look at a couple of names individually that have the best forward PE ratios because a lot of names in this space are overheated. So if we look at two that have the best forward PE ratios in terms of low PE ratios, one would be TSM, which is still in this uptrend. We did dip below a little bit on Tuesday, but we have since reclaimed that and are continuing to head up. I have not found a great place to add to my TSM position. I've been looking for it. I've been waiting for a pullback and we just haven't gotten it yet. So I'm keeping my eyes on this chart. I will absolutely let you guys know if I do find a good entry down the line. And then MU, I think we might be getting into a good entry point on this. So MU had a really strong recovery from the bottom, actually from the April 7th lows here. Let's see, I think it was like some odd percent from $61 all the way up, 11%. So pretty darn good. And I'm watching this trend line here where all of our price action was rejecting from. And now we broke through that trend line. incidentally, on a fourth time breakout. 1, 2, 3, fourth time breakout. Good move. And I don't know if we'll get all the way back here. I have my alert set right here at this volume cluster at 104. This trend line, wherever we intersected, maybe it coincides with this other volume cluster in the 200-day moving average, would be around $100. I would consider that for this run up right now a great value and a place to potentially get into MU. And then when that happens, you just want to be looking on the charts with here the daily RSI. If we're intersecting either of these points, as the daily RSI is getting to the bottom of the range, that increases your odds of this being a good bouncing point where you very quickly could see the stock reverse in the other direction. The other thing you can look at on smaller time frames is the 4-hour chart right here, which is already oversold. Where we are in the confluence model clouds, I often talk about these moving averages of the clouds playing a repeating narrative of a few bounces in the upper band, and then in the center band, a few bounces, and then we get in the lower band, and we usually have a couple of swings in here. And so this would align with the theory of going down just a little bit lower. We usually see 2 to 3 swings, and we've completed 2 of them right now, and then breaking back into the neutral band before heading back up. Anyway, just a quick thing on how to read this double confluence model. But this narrative repeats for all stocks time and time again. Lower band, couple swings, center band, neutral, and then upper band. When we don't break into the center band and go through it to a downtrend, then an uptrend continuation is most likely. One to watch, MU looks like we might get an entry on it sooner than later. TSM will probably have to be patient with that one. Moving on to Bitcoin and just starting on the weekly time frame, because we've been watching this massive bearish divergence on the weekly RSI, and we have our faster portion of the bull market support right here at 62. So anytime there's more explosive movement in the price action, we're above 62. As long as we are above 43 on the weekly RSI, we're still generally in a bull market. When we drop below there on the weekly on Bitcoin, we're traditionally in a bear market. So just a little RSI indicator for you to watch there. But right now, I was hoping we would blast through this line to confirm more of that parabolic portion of the bull market. And right now, from the price action we're seeing, it seems like we might chop around between this and the 62 level for just a bit and maybe get our breakout in September. But obviously, we can have our theories, and we ultimately need to let price action lead. If we can get a good rally on towards the end of the week and test that trend line and then perhaps break through next week, that would be a great sign of strength. And as I've mentioned before, that would most likely have me moving some of my other assets and allocating them to Bitcoin or Bitcoin proxies, because this is an indicator to me that we are getting into that euphoric phase of the bull market, but this might chop around and take a few weeks to get there. If we move into the daily time frame for Bitcoin, we have our 3 breakout zones. So we have our 110.5K level right here, which was our last breakout zone. We have this line right here, which represents overhead resistance from those peaks in December and January, or actually, I'm sorry, December and January. And then we have this breakout line here, which goes all the way back to the peaks of the previous bull market in 2021. And generally, we have held above that line all week, which was a great sign. And then we broke down from that. And so I was anticipating lower prices between that 113 to actually this next level at 110.5K acting as support. But we quickly today on the daily candle wicked back up into the range. And our new daily candle for Saturday here has not done much yet. But this is a good sign for potential strength remaining in the trend. I was concerned that we might chop around a bit more, but just looking at the daily, this is looking good right now. And often this happens where we have an established range and we sweep the lows and just wick down there really briefly. So the fact that this recovered so quickly is a good sign to me. The only thing that is slightly concerning, if we go into the 4-hour time frame, we have this underside trend line that I've been watching that we respected as support and then broke through right here. So that is not the best sign. We still have some near-term work to do. Even though we had this quick wick down, I would really want us to reclaim this trend line before the end of the weekend, ideally close our weekly candle back above that to really give me confidence that we're going to move higher sooner than later. If we reject from this trend line and then pull back again, then look out for those other price levels below. So I would say first support is coming in at 13,500 and then 10,500 roughly after that if we do reject from this trend line. Moving on to Solana, and I just want to look at Solana on the weekly time frame really quickly because we haven't looked at it on this time frame before. And just like Bitcoin, we have had a bearish divergence at least through these first two peaks where the price action is making higher prices, but our weekly RSI is printing lower highs. So bearish divergences normally lead to a correction, and hopefully this was the extent of the correction that we saw right here. But the one thing to be aware of right now, we have an overhead resistance on the weekly RSI. So if we reject from that this week, I would just anticipate a few more weeks of chop, potentially into September, like we were talking about potentially with Bitcoin, before attempting this again to break through. But really watch that weekly close on Bitcoin and Solana to see what that weekly RSI can do, because that's going to tell us a lot about the near-term trend over the coming few weeks. Either we're going to have a bit more time for consolidation, or we might be breaking out into very bullish price action sooner rather than later. So that will be a big deciding factor. If we look at Solana on the daily, you can see that our RSI really spiked up and we had this nasty rejection from the peak. And we do have the 3 down day rule in play now. You might say, well, that's a green candle, but because it didn't close above this previous price action within the body of this candle, it's still considered a down candle technically. And when we have 3 down days off of a peak, that can often lead to a bit more consolidation. So we were looking at the weekly RSI potentially rejecting there. This would be checking the box of saying potentially we need to consolidate a bit longer before we can test higher prices. So definitely something to watch out for. But if we're looking to hopeful signs, let's say, we did have this underside trend line here that we broke down in this accelerated clip, but that's okay. The overall trend line that's been supporting this market is still holding up. And honestly, I thought after we broke from this trend line and watching the RSI on the 4-hour, and just looking at the RSI from the 4-hour, I'll tell you what I mean by that. Since our bottom here on June 22nd, the 4-hour RSI has not been dropping down below 41. So that was our support zone. And as we broke down from that, after breaking down from this trend line and backtesting it for resistance, I assumed the 4-hour RSI was going to reset all the way back down to 30. And that would most likely coincide with testing this trend line here. That could very much still happen because we have not yet made a higher high in the recovery. Even though the bounce was strong today, we have our bottom, but we haven't passed these highs here on the bounce. So if we retrace and make another lower low, that's telling us that the bottom is not yet in. But if we just pull back a little bit and then continue up and make a higher high, that would be a great sign for a near-term recovery and would also point towards potentially breaking that weekly RSI resistance. So something to watch out there for on Solana. And the reason I pay attention to these RSI support levels in an uptrend is that it's normally a leading indicator of an uptrend coming to an end. If we go back to the April 7th recovery, as we were in this uptrend here, you can see that the 4-hour RSI bottomed out. And then the level was a little bit higher here, but the 4-hour RSI never tested the bottom of the range until we finally broke down from that trend line. So watch that in our current rally. Watch this RSI level going back to the bottom of the range on the 4-hour and this trend line. If we can sustain this lower trend line, I would say broadly speaking, we would still consider ourselves in an uptrend, but there's a lot to watch both on Solana and Bitcoin this week as we get into the weekly candle close. Moving on to MicroStrategy, we didn't have the strongest close to the week, but there was also weakness in Bitcoin. Monday was Michael Saylor hitting the ATM, and then I would suggest that the rest of this sell-off was just weakness in Bitcoin and the broader crypto space. We are still finding support at some of these past peaks here. right around that psychological $400 level. And you can see how that's played support in all these areas here. I would like to see us bouncing soon because we really are flirting with the support of this Confluence Model Cloud moving average. And next week, I would like to see us quickly reclaim this trend line and bounce away from this level. So let's see if that can happen. If Bitcoin continues to languish and is going to consolidate for a few weeks, I think MicroStrategy might be in a similar situation where it's just not going to be doing much. It might not be pulling back dramatically, but it's not going to be going up in a meaningful way either. So something to watch out for. But again, that weekly candle close on Bitcoin is going to tell you a lot for what's in store for the near-term future for that asset and MicroStrategy by association. If we move on to Tesla, we did have that sell-off after earnings and a decent bounce from our wedge pattern here. We are just into resistance, so I wish we would have closed the week just a little higher, but we're into the point of control here on the VRVP, and we're also into the 200-day moving average. We wicked just above it. So for Tesla to really feel stronger next week, I would want to see us get above that and reclaim this other resistance at 325. But if we happen to reject right here, then that would be a slight sign of concern for a further breakdown, because that would be our 1, 2, 3, and 4th retest of this lower trend line. And to the upside, it would actually just be our 3rd retest because we never made it all the way up there. So the bounce today was good, but there are still some causes for concern and some subtle signs of weakness here in Tesla. And we just need to keep our eye on it as things progress next week. And hopefully, if we have positive tech earnings, that can carry over to some momentum behind this stock as well. Moving on to Bull, and I did end up taking some profits this week as we got close to that $18 range just on some of my options. I haven't touched any of my spot because I want to hold that through the fall to see where this can really run to. And after we rejected near that $18 range, and the reason I'm doing that is because in this massive pullback we had from the IPO, this was our dead cat bounce. And there might be a lot of folks who chase this move prematurely who are still locked in at some of these prices and have been holding through a lot of pain and just want to get out. We saw something similar with UPXI when we looked at that on Monday. So that's why I took those options off the table. And I honestly probably should have reloaded here as we were getting into the 50% this previous peak and also support from the Confluence Cloud. You can see how we actually bounced just a hair above that level, which is usually a bullish sign when you have key levels like this and buying front runs them ever so slightly. That's just a subtle sign of strength in the charts to you, to let you know that there is most likely more upward price action still ahead. So I'm going to look for a good entry next week. We're right now finding support at the 618 of this local range right here. And I imagine since we're in this upper band of the Confluence model, just like we talked about the narrative earlier about taking a couple swings in the lower band, now we are taking hopefully a couple swings in the upper band. And I'm targeting at least this extension here from just below the $20 mark up to just over $20 right here as the main zone. And then we just have to see what the stock can do from there. Potentially we get to the 1618 extension at 2470, but one day at a time with this one. Generally speaking, I think we're still going to grind upwards. And if the market slows a little bit over August and September, obviously that would most likely take some momentum out of this too. Moving on to one we haven't talked about in a while, but that I have stayed in, which is CELH. And this has just remained in its upward grind since the bottoms here. And we have had this downward trending channel or flag, which again, channels normally that are downtrending break to the upside. Uptrending channels like we looked at on the NASDAQ normally break to the downside. And so we just had that breakout this week. We are still targeting our ultimate price target overhead of that $60. We bounced off support on the outer Confluence model cloud here. So things are looking good for Celsius. I don't think we're going to get there super quickly, but we do have earnings on the 12th of August to watch out for. So if there are very positive reports in those earnings. In their last earnings call, they had new partnerships and distribution was picking up. Perhaps that accelerates our move up a little bit, but I wouldn't be counting on it. I imagine if this gets there by the fall to that $60 level, I would be happy with that. And I'm just staying in it for the time being. Moving on to HIMS, where the breakdown from this wedge and the price target we talked about on Monday of that $38 did not play out. And these patterns and price targets, they are not 100% guarantee. So we have to remember to always go with the price action and let price action lead. And I made the mistake of not watching this closely enough. So I got out of some of my call options as we broke down in a small profit because I just loaded up on these bounces here. And I should have been watching it on the 4-hour as we retested that and got resistance, but then just slowly grinded higher and then seeing all this volume coming in. It would have been a good moment to get back in on those options, even if I'm chasing slightly. So I missed this one. We did get some resistance now overhead at that $59 or just under $60 level, which is our 786 level. We overshot the price target at $57 that we've been talking about for quite some time. So there's a lot of strength in this name right now. Part of that was because of strong forward earnings expectations. They had some legal headlines of things that were resolved. So that took some overhang away. And there was also a big spike in trading volume on both those things. So bullish options triggered that immediate price action. And I imagine maybe there were some shorts too that got squeezed. So anyway, I'm sorry about that one. Not everything always goes to plan, but I have to stick to the rules of what the TA is saying. And most of the time that works out. And sometimes in this instance, it doesn't. But I suppose we can't have a 100% hit rate. Bringing up another one that we haven't talked about for a while, and that is Decker's brand. So they have UGG, Hoka, a bunch of different shoe brands. And they really got beat up on tariffs. They already had a sell-off on this earnings because Nike was cutting into some of their sales. And then tariffs happened and they just fell out of bed. And I bought on this ugly inverse head and shoulders here, wrote it up and sold when our daily RSI broke down, which luckily was just before their last earnings. And we dropped down and we had been languishing around in this lower band. And actually, I had gotten into some calls and then I got out of them because we had this underside support that I was watching. So bounce. And then as we came back, I was already in my calls from this last bounce and we broke down. I thought a fourth time breakdown, maybe we're going all the way down to 180 with earnings coming up. So I got out of them. And of course, we bounced right here at that 95 support that we found initially. And now we've formed a bit of an island reversal. Not a bit, it is an island reversal. Island reversal is where you have a big gap down, consolidate, and then we have a gap up. And this is usually a very bullish reversal signal. And we can also see that on the daily, our confluence model clouds are squeezing. So it might not run straight up, but I imagine that we will eventually head into a more meaningful uptrend. And this was at $200. 95 would have obviously been a wonderful buy, and I imagine Deckers can get back up there. If we look at it on the weekly time frame, we are way oversold. RSI oversold on the weekly on this initial drop, which is where I first got in. That was also part of the reason. And now it's just starting that recovery. I think there is still a lot of upside for this, but I don't know exactly how quickly it can do it and how long it will take to get there. But if you are interested, that is one to watch. It doesn't move quite as quickly as some tech names, but it could be darn near a 100% gainer because they were all the way up here actually at 223. So not quite 100%, but pretty darn close. Just quickly touching on Palantir, which had this bullish breakout to the north side of this overhead resistance. We broke out, dipped back underneath, so I was watching it as a potential fake out this week, and then had a strong close above. So it seems like Palantir, even though it's overextended on a lot of time frames, still wants to keep grinding upward. If we just bring up our RSI, it's not super overheated on the daily, but if we go to the weekly, you can see we are in a weekly bearish divergence on the RSI, where we printed our weekly RSI high here already, and we've been grinding higher on the weekly while the RSI has been dropping off. So that's just one warning sign to watch out for. There probably is still upside, but it's not upside, in my humble opinion, that is going to last for 6 or 8 months. Eventually, there's going to be some kind of correction. I would say within 6 to 9 months, I'll give it. Going just quickly to SMLR, and this was one that I just added to a little bit again this week, just to give you guys an idea of what I'm thinking. We have this overhead resistance where we rejected from it once, twice, 3 times, and 4th time we normally have a breakout. And we also, as I've been saying, the Confluence Model Cloud now is bottoming on the daily and can most likely expand to get this into an uptrend. And I had a limit order set at these past peaks here at $37 that filled. We wicked a little bit below that, but at least if this is the low right now, we're making a higher low right now on this bounce, and then presumably can make a higher high as we recover. I had sold part of my position up here as we were getting into this trend line. So this is me just reestablishing my position on this on the pullback. And that was a, 23% pullback. So if this does hold as low, that would be an efficient trade, but it's not confirmed yet. We haven't bounced away. And if we break down below this, I would consider letting go of at least that portion of my position. Moving on to OKLO, which really took us on a wild ride this week. On Monday, I was saying on this big pullback, if we would have dropped below this level here at $58, I would have sold my position because we'd be breaking almost below these peaks. And this big pullback was just on some of the similar news that affected the NASDAQ. And then we had a very strong bounce away into new all-time highs. And so today, as we got into, it was yesterday, as we got into new all-time highs and almost to $78, our price target was here at $75.50. I sold a little bit, and just 25% of my position. And then I have another 50% that I plan on selling at $78. So I put that limit order in, which is just above where we are right now. Where's 78? There's 78. So if we hit that, that'll take me out, and then I'll just have 25% of my position as a runner, which from that breakout where we got in would be a 46% gain. So not too bad for a couple of weeks on OKLO. Now we are in blue sky breakout territory, so it could go a fair bit higher, but my rule with these names that I'm trading, and I have a lot of these positions, is just to stick to plan, and we hit our price target. Maybe I get just a little bit higher. I leave that runner. That's good enough for me. And then if there's a pullback and another good setup, I would consider trading this one again, but right now the trend looks strong. The daily RSI still has room to move. If we look at it on the weekly also is not overextended to where it has been in the past. So all of these timeframes are saying that this could potentially go a fair bit higher. If we go back to the daily and we just run a quick fib-based extension on the weekly, it's too aggressive doing it from those lows. If we just do this recent price action here, that would actually 100% target is exactly at that $78. And then the 1618 target would be at $96. So those seem like realistic targets for how this has been moving. So good job if you took that trade. And if you didn't, this thing has been volatile, so you might get a chance for another entry. Just that one pullback we had this week was 17%. So it moves quickly. Okay, just quickly looking at RGTI, because someone messaged me this week asking if I was still in it. And yes, the price target we have for this one is up near $30. So I'm holding on to it. We had this great breakout. We are just consolidating and finding some equilibrium right now. And my assumption is that we are going to have another leg higher on this. So just holding on to it for now. Consolidation is normal. We don't want things to move up in a straight line. And, even in this explosive move we had up here, there were some big pullbacks in that. So you have to be ready with names like this for volatility, and just this one pullback here was 47%. So nothing to sneeze at. This will build your mental fortitude as a trader, being in a name like this. Okay, speaking of mental fortitude, I just wanted to go back to ATAI, which we got into a couple of weeks ago, and just reiterate that these are risky plays. This is a very small percentage of my portfolio, and I'm assuming this can go to nothing. And we got up to almost $4 this week from our entry at just over $2. So 100% return in 2 weeks. Great. But then we also had a big pullback. And after hours today, someone was selling that dropped the stock all the way down to just above $3. So we closed at about in line with those peaks right there. So that was in the last 2 days, a pullback of about 25%. So if you can't stomach volatility like this might not be for you. And if you got into this position and you are hating life right now, that's telling you that your position sizing in a volatile asset like this is probably a bit too high. So these are very high risk, potentially high reward, and they have a ton of volatility in them. So they're not for everyone. And if you are in them, please, risk management in terms of your position sizing is all important with these riskier plays. Last one I want to talk about before the treasury plays is ASML, and they make hardware and parts for the semiconductor space, and they have really been beat up the last little bit here. We had a nice bounce from the April 7th bottom, which is actually coming off of a trend line. And then we've had this decent little pullback past the 200-day moving average. And actually, if we go out to the weekly, just to give you context, their pullback wasn't just in April of this year. They've been pulling back since July of 24. So almost for a full year, actually a full year now, they have been pulling back. Now we've had this rebound and we set a higher high on the rebound. Hopefully now, as we're bouncing off this line right here, we are forming a higher low. And I got in with just a little all options position there because the daily RSI bounced off the bottom here. We are really overextended in terms of mean reversion, and we are also into a little bit of support where these other candles bottomed. Yes, it could drop a little bit lower to say that 688 level, but this was my first entry here, and I would deploy more if we drop lower, and I would watch it from there. Obviously on the 4 hour, we are way oversold, and a mean reversion dot of negative 2.41 on the 4 hour mean reversion, which was the same level that we had here in April. So this is one that I am watching for a bit of a rebound, and I'm just, because of the share price, it's expensive to build a large, meaningful spot position. So I can control more shares via options on this, which is why I'm just in this with options as opposed to any spot. Moving on to the treasury plays, and some of these charts are not looking quite as strong. That doesn't mean I don't believe in them long term, because the treasury plays I am in are some of the ones I do think are stronger plays overall. So this isn't a rag on the names at all. But right now we have DFDV, which was in this consolidation pattern of this wedge, and we thought we broke it to the upside. Then it reversed back in, then rejected from the underside, and continued to break away. We were saying this is a sign of weakness, a bit of a warning sign. And also, they announced more and more buys of Solana each time here that we sold off more. So this is just very curious here for DFDV, especially as Solana price was running up, that it was selling off. So investors are not liking something. I haven't figured out exactly what that something is, but we had our classic fourth time breakdown, 1, 2, 3, and then breaking down on the fourth one. And if we're just looking out down below, we are pretty close to finding perhaps some support here between 1786 to this previous bottom here, where actually we had these two wicks lining up at 1608. So I did let go of some of my position because my cost basis, I just got back into it here, is just above $16. And I just didn't want to risk going below that and being negative after holding through all this run up to 30, which 100% gain. That would have been good to take some off the table, but I really thought we were breaking out and I didn't act quickly enough. So you don't do everything perfectly all the time, but took some risk off the table. And if we break below those local price action-based supports, then this would be the fib extension to the downside from these last swings, would be right here at 1429, which I think is a very interesting level because it's near these bottoms and this previous consolidation peak before we really shot up in a meaningful manner. So if we get down to that level, that would be a sign for me to perhaps get in a bit heavier into DFDV, assuming we can see that bounce. And maybe you want the price action to prove it to you, to see a bounce before you get in, as opposed to catching the falling knife, which is a great strategy to wait for confirmation. The cost of confirmation is obviously getting in at slightly higher prices, but you don't have the risk of further downside. But what I like about entries like this is that, as we always talk about, they give you a clear invalidation. So if you are getting in right there and it breaks below, you can set your stop order and get out. But if we're looking at the 4-hour time frame, I imagine getting somewhere like that level would also coincide with the 4-hour RSI bottoming out. We're close to printing a mean reversion dot on the 4-hour. Let's just look back at the daily really quickly. And, whoops. And the daily RSI still has some work to do to fully reset. Maybe we don't get back to the bottom of the range on the daily, but we are close to printing a mean reversion dot there too. So that could be a signal to look out for a turnaround point. But broadly speaking, we're still below the 50% of this overall range, which we know is the weaker half, generally speaking. So holding on top of that, that would be a real sign of strength for DFDV. ASST, as you guys know, I got out of this one for the most part on this spike. And now we have had this falling wedge forming for the last couple of weeks that we just broke out from. So I entered a little bit of a position, thought it was going to plan, and then we rejected at this level here just below $5, or actually right around $5. And now we are riding this down for support. So I'm just looking at where that next bounce point is going to come in. Our 4-hour has been oversold and is working its way back up, although now we're back down to close to the bottom of the range. And our daily RSI, which has not reset this whole time, actually, well, aside from this big spike up, looks like it's about to print another mean reversion dot. And we are just about at the same levels on the daily RSI as our previous bottoms right before and this big run up. So it's definitely one to keep on your radar. We do have some open space down below in terms of the VRVP, just in this air gap. So I'm still watching potentially that 342 or even all the way down to 256. That would really be a big drop. But if we can find support before that for a bounce to not make a lower low than this previous bottom here, that would be a much better longer term sign of strength. But overall, I'm watching this one for hopefully a bounce incoming. And last one to mention here, and there are many more treasury plays we could mention, but I'm focusing on the ones that I think have a little bit more substance behind them, and CEP, just because of the proximity to the current administration in the US, definitely has more tailwinds, but it has been, as you can see, weak and really came back down to earth. But we are finding good support here at that $27 level on the 4-hour chart. Our mean reversion is very low compared to any of the price action. And our 4-hour RSI didn't bottom all the way like it did here, but the mean reversion dot is lower, and we're finding support at this center confluence band. So I'm hoping we can bounce here and turn these confluence bands around to start moving to the north side. And if we're just looking on the daily time frame, our daily RSI obviously isn't oversold, but it is really low compared to the history of this asset since it's been a treasury. So it's looking like it's getting there. It is weak, but what I like about the current positioning is that we just have this very clear support, and we've been forming this base. So buying here gives you a clear invalidation to stop out at, and it's also telling you that obviously the buyers are stepping in there and we're oversold, and a bounce is more probable than continued selling. So one to keep your eye on. You know what? I lied. I said that was the last treasury play, but there's one more that I got into this week, and that is BMNR. This is the Ethereum treasury that Tom Lee is associated with, and I have not been in Ethereum for a couple of years now, but we have to go where there's momentum in the space, and Ethereum has definitely been strong. We know that Trump's kids are also backing many Ethereum projects as well as Tom Lee. So it has that momentum behind it. Obviously, this went parabolic, has come back down to earth, but I love that it has been finding this solid level of support right around $40, between $39 to 40. And I got into a position just above 40. And this, again, gives me that clear invalidation that if this breaks, we have an area to set our stop order to, and then we can look for wherever that base might be, whether it's at this gap fill or the 200-day moving average. But bouncing from here, I would say, would be the best if we can mount the strength to do that. We just need to see what the broader crypto space is going to do. Entries here might be a bit premature if we do slow down over August and September, but it still at least is a fairly clean trade in terms of giving me a place to get out if that price action breaks down, and then I can reload later. And I lied twice. There's actually one more treasury play. This is UPXI, Solana treasury that we have been in, that we got back in at this base at the mid $2 level and then rode it up. And as you guys know, I got out on this spike here at just below $9 because I anticipated selling coming in. Then it spiked up one more time when they added to their treasury. They are now the largest Solana treasury. And we've been retracing a bit since then, and I've been looking for a place to get in. And I just did that today as we got to the 200-day moving average and also the 382 of this local fib level, which incidentally, James from InvestAnswers got in this week too. So not as good as the earlier entry where we are here in the high $5 range, but still for the potential upside for this, and if Solana runs through the fall, it could be a good entry. There is obviously a chance that we still go lower and maybe we find support at this Confluence model cloud at the $4.75 mark. Let's just turn on the other fib levels real quick, the 236 and the 786, to see where those are landing. Oh, actually the 236 right here coincides with all these candles at $4.47. So that's another interesting level. If we break down for some reason, which 4-hour RSI could still reset, our mean reversion isn't crazy. It did print a dot, but it's not 2 standard deviations overbought. But there's a chance that this could reset further, and we can just go into the smaller time frames. Oh, we just actually on the 200-day moving average got a bounce here on the 1 hour, printed a mean reversion dot. So this is telling me that at least on the 1 hour, we have some near-term northward price action, but on the 4 hour, perhaps we could still pull back and find another low. I'm actually surprised with James getting into this for how small the market cap is, that it didn't see more of a bid, because normally when he gets in on a trade, a lot of folks follow him into that. So that was interesting to see that there's still a fair amount of profit taking. And volume really, while it's fairly high compared to this zone here, really didn't compare to the buying and selling that we saw in these climax candles here. So one to keep your eye on, again, with all these treasury plays, I've been saying, tread carefully because they can move by crazy percentages from the top down to where we are now. 46% retracement in a little over a week. So watch out because you're playing with fire with these, and we know how that saying goes. Okay, so that's it for the charts. One I wanted to mention that's not chartable yet is that I did get a few hundred shares of the Figma IPO on order. Now, I'm not sure how many of those will fill, as with the Circle IPO, I only got about 17% of my IPO order allocated, but IPOs can be risky, and I'm not expecting this one to run quite like Circle. It's a totally different narrative. We'll cover it once that happens. Anyway, I hope you all have a lovely weekend. Watch crypto again for the weekly close this week, and I look forward to seeing you all Monday. Bye for now.